Welcome to this edition of the Cattle Call. I'm Susan Littlefield here on the Rural Radio Network. We're being joined by Brad Kooima. He's with Kooima Varilek out of Sioux Center, Iowa, as we look at the happenings of this cattle market, not only from a midweek trade, but what we're going to see as we head into the week in the future. A lot of things to look at on this market trade today and what we saw, including this cash market. Now, we'll talk a little bit about one of the majors making some purchases. Does that mean maybe there's the need for cattle? Are we catching up on the cattle? Are they digging into those pockets a little deeper to pay? So I think we'll start there, Brad. Is that what's happening? They just need it?
Well, that's a good place to start because the supply side fundamental, obviously, that's the most significant is where are we at in terms of being able to get out from behind this backlog that was created by the inability to slaughter cattle there for a couple of months. Now, and maybe I'm trying to read too carefully, but I don't know how you can. I mean, that's kind of what our job is here. But one of the majors that has participated in the cash market all along has been one, certainly the leader in an awful lot of this cash trade. Would buy some cattle every week, but it was always on a limited volume. And now right around here, the last 24 hours or so, they have bought a significant volume. Now the bids are largely steady, but I just wondered if maybe that was a little bit more of a constructive sign that they were willing to take on a little more inventory. I always have a saying that, well, if the packer wants to own cattle, so do I. That implies that, maybe they've got meat sold ahead. Maybe they see that the numbers are getting a little bit tighter. Maybe that's why they have a desire to get a little bit more out in front of the market. So that might be just a little bit encouraging. We are getting a bigger tier, Susan, between the north and the south. Where we'll have cattle today that'll probably bring towards $1, and the south has cattle that'll bring in 94 to 95, which does reflect the area that is more current, which is us. Nebraska, Iowa are nicely current, very nice. They tell me Kansas is getting closer, Texas not so much. So as we continue to export cattle out of Texas all the way up as far as Dakota City, etc., hopefully that'll help to pull that oversupply and get that leveled out here again.
Is there any concerns with as dry and hot as it is in the Texas-Oklahoma panhandle that this is going to have some effects on this cattle market?
Usually that view is bearish. The fear is that you're going to bring some non-fed slaughter to town, cows, that you might have people willing to merchandise cattle easier, quicker. They don't want them to die in the heat, yada, yada. Today's powerful day in the face of all of that is kind of impressive. I thought maybe there was a bit of a story there as to your question on the feeder cattle market. Because just imagine if you're Texas, for instance, and you're backlogged, okay? So that means the pens are full, obviously. So if you've got cattle that have to move off of grass because you ran out of water, ran out of grass, would that not be potentially negative to feeder cattle? Because who wants them? Where are you going to put them if your yards are full? So the feeder cattle have absolutely literally led us here the last couple of days. So to me, if that's a situation, the market isn't caring about it right now. It's caring about something else, which is, you and I have talked about, this saying, I'm not sure what the market's trading, and that isn't meant to be a sarcastic comment. It's meant to say that there are times when the market cares about this kind of news, and there's the times that the market cares about a different kind of news. And it seems to me like the market now is starting to care about, okay, we've been in this COVID nightmare since end of February. We are getting a lot of cattle dead. We're starting to look past it. We are a futures market, right? And then the other thing today, which is COVID related, is I think the big deal today for a lot of our market was that outside market news today, and that would be what you and I talked about, and that's the promising vaccine, right, for COVID-19. I thought that was a catalyst today, Susan.
So good news, obviously, moving in that direction on it. Do we see that in the days ahead kind of playing an underlying factor in this cattle market?
Oh, I think it's huge. I worry that we've got ahead of ourselves, like always on the news. And maybe tonight they'll go, yeah, well, the vaccine looks pretty good, but we're gonna have to test it for 4 years or something. Being sarcastic. They say they're going to fast track it, of course, but it's not going to be available tomorrow. Certainly. But it speaks to the worry that's been the last 3 to 5 days. It speaks to How come we got to curtail the kill? Why is Greeley not killing at capacity? Why is Amarillo not killing at capacity? Why are we have help walking out? Some of it's labor. It is. Some of it's compensation, but some of it is they're worried about, if somebody got sick, a coworker, yada, yada. So, a vaccine would be healthy for the economy. It would be healthy for the ability to reopen states, schools, restaurants. And of course, then it would certainly be helpful for the county.
So is it $1 million question in the fact that if we see, like we saw it at JBS in Greeley, they were talking about the issue with employees and COVID. Could we go back to what we had before, where we were having to close plants down and make this cattle market even more nervous?
Well, that is the gorilla in the room. For me to sit here and say that we don't have to worry about that, that is not responsible. Where I sit here, we've got more COVID cases than we've had this whole time by far. Now we're getting to the deal where today we all kind of knew 2 new people that got it, and I'm living in a small town. This whole issue of have you had it once, are you immune or not? I can't believe this is what we got to deal with as a cattle analyst, but it's part of it. So I still think safety first. Still be careful out there. August cattle are a big premium to the Southern cash. I'd be, even if I was a marketer, you got to look at a 101 level, thinking that 2.5 weeks I can consider delivery. So I would still be careful. Put options are a great idea. When the market's got upside potential, that's the time to use put options. I know it's hard money to spend, but buy them and hope you're wrong. Hope that we get through the rest of this mess without any more catastrophes.
And finally, what about the fund interest? What are you seeing there?
That's a great question. Thank you. We went through this whole period of time where, like we did after the Holcomb fire, declining open interest, less players, less participants. The funds moved totally to the sidelines. The funds don't like uncertainty, no more than you and I. So the fund goes, well, this is not a good risk place for me to put money, right? Open interest actually got down to, we haven't been this low in almost 4 years. So finally in the last 3 days, Monday on the reversal down, which made me queasy, we had a big volume day and a big up in the open interest. So I had some new players in. Yesterday, another down day and another up in the open interest. So somebody's buying something. Really anxious tomorrow morning to see what the open interest does on the huge updated. Hopefully it's a huge up in the open interest, which should show you that the funds dare to come back. It's safe to go back in the water, whatever. You need them, whether you custom or not. We need the funds to the long side because we have very little long speculator, and the long commercial is completely absent from our market, the long hedger. So we need the funds to come back.
All right, sounds good. Thanks, Brad, for joining us this week. Brad Kooima with Kooima and Varilek out of Sioux Center, Iowa. And that's this week's Cattle Call. I'm Susan Littlefield.